Good morning, everybody. This is Dennis Will with the Active Trend Traders. Welcome to How to Make Money Trading Stocks for Friday, the 27th of May. And Tracy, no, I'm not in Hawaii yet, but I'm sitting here in an empty house. My wife and I are cleaning house today to basically complete the move and start moving on to. We'll be floating around California for about a week and a half, and we'll be in Hawaii on the 7th of June, and then back to the mainland towards the end of July, and where I'll be continuing the BAM meetings and all that kind of stuff through July, August, September, and the first one in October. So we're going to be hanging around here on the for several months, waiting for our cat to be able to pass the quarantine restrictions over in Hawaii. So let's get going. I want to remind everybody that the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Michael Bishop is not joining us today, and neither is Mike Traeger. For the premium members of the Active Trend Trading system, our next training and the topic is basically, is it me? And we're going to talk about trader psychology. I'm going to be working with Lyle a little bit to get some subject information, because he kind of functions as a coach / mentor, sports psychologist, to be able to tie in some of the similarities between the two. It's quite interesting. Anyway, so that will be, it's not next Wednesday, but the Wednesday after we will get going with the training sessions again. That's June 8th. And the information will be sent out probably next week or the week after for the next training session. So this big move, I was talking to Mike Traeger earlier in the week, and also John Carter, chat with him a little bit about the concept of, what the heck is fueling this big move that we've seen this week. And there's a lot of people scratching their head as to what's going on. Is it that basically the market just said, hey, Fed, do what you want to do. We're going to keep going. I don't know if those of you who read Investor Business Daily, but they were talking in Investor Business Daily about there's a division in the bullish camp, a division between the people who want the low interest rates to continue, and the other side of that, people who want basically want the rates to increase because they believe it would show a stronger economy. And as I wrote last night in the market update, is that the big question is are the bears out of bullets and have the are the bulls out of bullets and have the are the bears so shut up that they just don't care right now? Because there was for quite some time there's been a very bearish overtone with people looking at the charts and seeing the double, the head and shoulders on the S&P that basically confirmed, but then all of a sudden, bam, we get this break back up through the neckline. So as we look to close out this week, the S&P is banging its head on resistance. NASDAQ, great weekly rally, but also running into overhead resistance. And for the Russell, it's just basically a ditto. So what do we have to look forward to that could be catalyst for the market going forward? As you know, Janet Yellen was speaking today, and also being a Friday before a 3-day weekend, the market has had a slightly upward bias. And Janet Yellen, and there's not been a huge reaction. Janet started speaking at about 10:15 or so Pacific time, and the market has had very little reaction whatsoever. And so, but on June 15th, the Fed will let us know whether or not they're going to raise rates. and it seems as if they are posturing so that will happen, and they're giving the markets plenty of warning that, hey, an increase is coming. Oh, okay, thanks, Scott. Yeah, the news agencies I was looking for had it on their calendar that she was going to speak. Okay, cool, thanks. But the Fed, they have their next determination on June 15th of whether they're going to raise rates. And if they raise rate, it's going to be just very, very small amount. And then the question that comes up, are we going to, what are we going to see for the summer doldrums? Is that going to be a factor this year? Because oftentimes we'll get a little bit of upsurge in June, but then been a downturn later in July. And as we look at the charts here shortly, it looks like the charts could be setting up to just kind of move sideways until the Fed meets, and then, but it is bound by a very strong level of support and resistance. And so we'll see what takes place from there. As of last week, we were getting a rebound on the percentage of stocks above their 20-day moving average. That rebound has continued this week. Again, a very rapid move up and a little bit of a rest yesterday. We're waiting to see how the market closes out today. Those of you who are trading strategy number 3, I'm trying to wait till the last little bit before I sell premium going into the weekend, because I would like to have the time decay working in our favor as we move into the weekend. And so an alert will go out almost immediately after this, after our session, letting you know what I'm selling as far as Tesla and the spiders go. And so Scott pipes in, he says he finally asked her about rates. She said if the economy improves, and she think it probably should, and if the data supports it, she said that she could see cautiously raising rates in the coming months. And so that seems a little bit no, Tracy, I did not. I'm waiting for a little bit of a rebound before we can get the covered calls on TZA going. So you didn't miss anything. And so here we are on the 27th, where it has pushed back up and pushed higher. We'll see how that ends the day. See if we, if that still closes up here, is it going to kind of reverse down. This particular chart does work well with the, well, that's not a very good trend line. Let's try that again. So it does work pretty well with those being resistance areas, just as a place to observe what's going on. And so we could see it could push back up in here. We saw that several times back in 2015, where we'd have a nice little trend line going on. The percentage of stocks above their 20 would push up towards that trend line and then roll back over. And this was the big correction in the latter part of December into the midsection of January before we got our initial rebound. On a longer term chart, let's take a look over here. We have the S&P, this is the spiders. We know we have resistance up here at about 210 to 211. That is long term. This, let's see, does this finish? Yeah, today we'll finish the month of May as far as trading goes. We know we have other strong support, two levels of strong support. One here at about 190-ish. About 190-ish. And the other one down here at about between 180 and 185 as a level of support, where on a daily and a weekly charts those show up. But since this is a monthly chart and based on monthly closes, those lower levels of both support and higher levels of resistance don't show up on this. And some people basically when they look at this as a monthly chart, they look at the closing date only, and all the other things around it they consider as noise. And so that's what's going on. We are pushing back up where more stocks are moving back above their 200-day moving average in this case. And so at this point, other than to say, because here's where we finished just above 55 for April, and as it turns out, the last week in May basically saved May from being a down month. As we can see, we've got a really nice rebound going on from last week. Both the Dow and the S&P are up about 2% from last week. The NASDAQ and the NASDAQ Composite and also the Russell, actually, you know, the two NASDAQ indices actually got a really nice additional bounce greater than either the Dow or the S&P. The Russell went up about close to 1.4% for the week, and that's where it's sitting right now. We are still below the highs, but as you can see here with the S&P is making progress up towards the all-time high that it hit last year. Whoops. Go to the charts. There we go. Let's take a look at what we've got going on here. Here's the S&P, and looking at a longer term perspective on the weekly, as you can see, the TSI is starting to turn back up, but it hasn't happened as rapidly considering the size of move. Part of the reason for that is that this particular move has been happening with a little bit lower volume. It has not been necessarily a real strong move up, other than the percentage of moving up, up has been strong. What do we have going on the daily chart is basically we've got the momentum has jumped up above the zero line, which shows us that we are in somewhat of an uptrend, short-term uptrend, but we're still working off of this negative divergence that was put in place back here with these highs here, when they jumped up and hit these highs being lower than its current high, and so it's still showing a little bit of negative divergence across here. Same thing, we can say the same thing on the TSI, and it just looks like it's trying to stick its head above and break that trend line. What I'm looking at for today is, do we hold up? And because we are approaching resistance up there in the 2,100 level, 2,100 level, approaching some past resistance, and so we're in the resistance zone. If we push through that resistance zone, then the highs from last year are just a stone throw away. And as we've seen for the past, almost for the past since the beginning of the year, we got a little bit of, a couple of really nice drops early on. Well, here's this year. So almost for the past 2 years. We're still working within that confines of that overarching rounded top. But a big question I have is that while price action is still under the dome, is it, in fact, is the dome cracking? And only time will tell on that. Going into next week, just as we basically finished last week with congestion right here at the moving average cluster, we've popped above it. Price actions ran so hard that it's got itself extended away from the moving averages, and if Mike Traeger was here, he would be telling us that, watch for some kind of reversion back to the moving averages. And so there's a couple of ways that I'll be looking at trading this going into next week. Is one, if we push up to the extremes of the past resistance and it then puts in a reversal signal, that would give us a lot more credibility for taking at least a short-term downward trade. If we go from where we're at right now, pull back into the 820 moving averages, and expect a rebound from that to take out. If we take out that, if we do have a pullback, take out that high and then take out that high, then we're probably going to revisit the highs from last year. We'll see what takes place there. The market currently is, at least looking at the spiders, they've kind of quieted down. There's not been a whole lot of action today, as you see, is that we're still working within the confines of yesterday's spinning top doji and still within at a resistance zone. Big question is, how strong is that resistance zone going to be? NASDAQ. Okay, NASDAQ. NASDAQ has, now this, it's one thing about the TOS charts is I had redrawn this to this top here, this swing high, and as you can see, price action on NASDAQ again after you've got strong support down around the just below the 4,300 level. We've got a whole bunch of overhead resistance that basically from current positions on up to the downtrending line, channel line, and also up here at the 4576 level. And we'll see what transpires there. Again, has moved quickly and rapidly where it's extended away from the moving averages. Same thing over here as we see on this big move up. If we're going into another stage of the market, if we bust out through this, then we're probably going to revisit the highs from last year on the NASDAQ as well. And so we'll be watching to see what transpired here. This was a perfect little pullback down to the zero line on the weekly TSI and then a bounce up. But as we can see, for the week, our momentum really hasn't really accelerated that much to the upside. TSI on the weekly chart pushing up towards the 50 level, which when it hits the 50 level, that tends to be a place where it wants to turn back and at least pull back for a little bit of a rebound. If we do get a pullback from here, we've got the moving average lines and also this level right here from this swing high here at about 4407 for potential areas that you can designate for support and alerts to say, okay, if it gets to that level, and have your action planned. So let's see. And lastly, let's take a look at the Russell. On this last trend line, still, it was still working within the confines of the downtrend, but we are starting to stick our head back above this downtrending line. Where's next resistance level on the Russell? Well, it's back up here at the 1154 level, and so at this particular time, this is pushing higher for the day, and after yesterday's little doji spinning top. But we've got strong resistance there at the 1155 level. If it pushes up to that, stalls, then we can look for a rollover and price action falling back down. The thing about this, this market, the way it is that if it has in its mind that it's going to rally, because there's a lot of people who are looking in towards the negative side of the market, if it does have in its mind it's going to rally, then it could, the Russell could continue to push on up to the 1200 level, but somewhere in here it's going to do a little bit of a pullback back into the moving average for a rebound. This is the first of the really potential higher lows, and that could be telling us that the bias of the market may be shifting some. Was chatting with a guy the other day, very knowledgeable guy, on what the market. Now he takes the other side of the bullish consideration, and from his perspective, he was going, everything in the economy is going really, really well, and it's growing, and everything's wonderful. And so his take on it is that we are going to, in fact, push higher. But at this particular point, we're not at a buying point for a bullish trade yet on the indexes, and we are certainly not at a point, because we're not getting any of the bearish candles yet, of saying, okay, it's time to reverse. We'll look how things end the day, and then we'll move forward from there. But this may be a first clue that there is some continuous uptrend to come. What I'll be doing with that, since I do own a small position in TZA, I will be basically selling premium against TZA, moving forward with the anticipation that it will move up later in the year. I'll pay down my cost basis on that on a weekly basis. So, any questions on the market, guys? Yeah, Dorothy, I will be sharing when I sell positions on TZA to keep everybody, even if a person isn't in that TZA trade, just so they can observe what kind of transpires with that. I do not want to be in the TZA trade any longer than like the 1st of July, because the TZA entity tends to lose value. It's because it is a leveraged entity, tends to lose value if you leave it on for too long. So yes, I will be sharing sharing what I'm doing to protect that trade. So okay, moving right along. So path of least resistance. It certainly appears that I'm at this point kind of favoring the sideways move, even though we may push up higher into next week or into the midsection of June. The theory, or the idea that we had earlier in the year, that this year was looking a lot like 2008. The market may be tearing that idea up totally and saying, hey, we're going higher. So, take your next opportunity for a long trade to get on it is what the market may be telling us. And we'll continue to monitor that. Mike Traeger, he does all the internal research, the background, the history, and all that kind of stuff. And literally, he is pulling his hair out right now because he's going, what in the heck is pushing this market higher? And like I said, he's pulling out his hair, and he doesn't have much hair to pull out anymore. But that's another story. At this point, we have not seen the downside pop up its head. We have not seen a negative candle on any of the indexes for the last 4 days. And this weekly candle is also something to keep our eye on. If we pull back to the midsection of the weekly candle, that might be an opportunity for a couple of things. One, to get long with either the IWM, the SPY, or the Qs, and also to sell premium against TZA. So here's those of you who we did not really have. We have an ongoing strategy of one trade. those of you who got in on the SRPT trade, I had a lot of comments back on the guys who got in on that. Worked out very well as the implied volatility was sucked out of that. When the news came out they were going to delay the drug, the approval of the drug that they have out there. And so we made a nice little profit off of that. We took a little bit of a hit on the spider side of the strategy 3 this week. We got out with a slight profit on the TSL trade, and so we're down a little bit from where we were last week, but still pushing higher, with especially with strategy 2 and strategy 3. And most of the folks I have been talking to had just been having a real challenge in doing their portfolio building this year, just simply because of, one, the volatility and the lack of longer term trends. So here's where we are with our equity curve. And so those of you who are, I'm going to be doing a special presentation sometime in the future. It's probably going to be after I get settled a little bit once we get to Hawaii, but I'm going to be doing it's more of a presentation on this strategy number 3. It has been working very well at both this year and last year. Here's the Tesla trade as of a couple of weeks ago. You know, since we opened the trade back on September 29th, 2015, we've generated over $11,000 worth of collected and booked premium. Our cost basis is now, we've paid for the initial $9,000 for the initial position, and now we have our cost basis is negative $20 for the individual. So that actually equates to a negative $2,058. And so as soon as we get to the place where what we've taken in plus what the value of the existing contracts are, when that equals where we've paid for it plus made an additional $9,000, I will close that trade and recalibrate it for the future going forward. Tesla's been an excellent stock to trade because of the volatility that it has on a weekly basis. But I'm working the spiders and the Tesla for this year. If you want more information about that, you can find it at this website here, activetrendtrading.com/training-webinar-recordings. I think I have that available to everyone. Monthly BAM meeting, San Jose. We're going to do some hands-on practice, and then we're going to be introducing some new presenters and all that kind of stuff for the BAM. And what we're going to do is try to get it down to a little bit more smaller nugget, bite-sized training sessions that will cover where every month we'll be covering a little bit of trader psychology, a little bit of individual stocks, and then some technical analysis. But we'll break it down rather than doing the 1.5 hour presentations. We'll have 2 or 3 presentations that will be done by people who trade very well. Kieran asked a question: what factors do you consider to decide whether to sell calls or puts for strategy 3, like on today, for today's trade? What I'm looking at, Kieran, because it's a 3-day weekend, I will go and if my trend is up a little bit, I will sell a call that is out of the money, but I'm still going to want it where I want the premium I take in from both the call and the put to be at least equal to what I need to draw in on a weekly basis to basically cover my cost and generate some revenue. And so I'll be looking at a trade that will basically probably be about a probability of 65% of being out of the money next week. So thank you, Dorothy. You went to the online trading course, and wow, is your information and training a bargain. Thank you. Could you send me an email on that? So training on how to do strategy 3. And at any time, hey, I'm going to be driving cross-country. My wife and I are going to do a cross-country trip in August, and I will be reporting from the road. I will be continuing our webinars from the road. As long as I have a hotspot, I will be working. And but if I happen to come by, I know we're going through Denver. We're going to be up in Washington State a little bit, but I would love to do an in-person webinar and or in-person presentation for you and your group. So the active trend trading system is made up of following the active trend trading pillars, or the pillars of active trend trading. Identifying what to trade, we look at only top quality IBD growth stocks and index ETFs and their leverage counterparts. When to trade, when to exit, what strategy we're going to use, and what to expect. Like if I put on a speculative trade, which I'm not, I'll let everybody know up front, this is speculative. And when I say speculative, there's an opportunity that it could basically go to zero. But I let everybody know that that's what we're doing. I don't do too many. I do only about 2 or 3 of those a year. The other ones are rock solid on the index ETF and or the stocks with from the IBD 50 and their other list. Active trend trading is a system. I've seen so many times that folks are not secure in a good solid system, but they trade a lot of what I call the strategies. I believe that the system has to be in place, and then you can trade the strategy. This is our strategy number 1, which is a portfolio building strategy. 70% of my dollars are tied up here, or waiting to be tied up there, I should say. Basic options, about 10% of what we do is tied up here. That's strategy number 2. And strategy number 3, wealth building, which is the one where I own I have an underlying, it's like I bought an apartment building and I rent it out on a weekly basis and collect revenue for that. So as we sit right now, prices are still under the dome. But I've changed we're still under the dome, but the question I have, kind of going forward is the dome starting to crack? We'll continue to monitor that, but it's got some really well-defined support down here about just above 1800. And so, yeah, I will ask him, Dorothy, if he can update this. And then secondly, because this is January, February, March, and so we need April and May in there. But we're still operating. This was that just above 2100, which was the high from last year. And this signal is still on, but it has lessened. And I'll have to redo the drawing. I'll have to take a look at it on the, if you're a Thinkorswim trader, you can go to, you can generate this chart your own, but you have to go to the profit charts on their website. I'm sitting here taking a look over here just at what's going on with the market. So how are we doing for time? Okay, good. So, hey, just a reminder, this will be the last weekend through the end of month in May to do a trial membership for $4.99. You get it over, there's a web link you can find it at. There's a little bit more. If you just want to go straight to the regular membership, I do offer a 40% discount on membership at this other link down here. The monthly value of all this is about $300 a month, besides including the weekly webinar training and also the updates throughout the week and the alerts on the trades that we do. So folks, I will see you in 2 weeks. That's when I'll do my next session, and then we'll get back going on a regular schedule from there. It's going to be exceptionally hectic. moving, for the next week or so as we're moving. And what I'll be concentrating for the active trend traders that are in the group today, I'll be focusing on primarily trading the index ETFs and or their leveraged counterparts, and Tesla are the areas that I'm looking at. Why am I doing that? Well, I'm going to be out of my normal environment, and so I want to be focused on just a very few things that have a strong potential of earning, making some money. And with what we've seen with Tesla, and that'll be also trading the Tesla stock, and do some strategy too also with Tesla. Same thing with the index ETFs, and that's where I'll be primarily focusing, just due to moving around and out of our normal environment. So have a wonderful Memorial weekend. Remember that the reason we have the freedoms in our country that we have today is because there was a lot of men and women who did in fact sacrifice their lives so we could have our the freedoms that we have. So while you're out there doing your barbecue or whatever you're going to do this weekend, remember that we're doing it standing on the blood of the folks who provided us this freedom. Scott, thank you very much. Yeah, it's really cool. I've been married for 42 years. Have we been married for 42 years, Michelle? And she says yes, and so, okay, so I didn't make a mistake today. And I kind of stayed kind of laid back. And I let my wife worry for me and stress for me. So it all works out. It is a partnership. So that's a trend you can be bullish on. Yeah, Scott, without a doubt. So hey, that's all I've got for today, guys. You want to look at, and if you have some charts you want me to look at, I will do that. Oh, congratulations, Kieran. Yeah, when you start pushing, 30 years to 40 years, 50 years. 5, yeah, Tracy. Were you able to get into the 5 trade? I know we've talked about that before. It did not do what we wanted it to do as far as getting a pullback, but it certainly exploded out of here. Challenging chart to trade simply because you get this gap up. Unfortunately, it wasn't down against any really strong, well, it was okay support, but it wasn't against a moving average to gauge off of. So, okay. And so, yeah, Tracy asked a question. Tracy, when did you get into it? Did you get into it? What price? $39. Okay, excellent. So 39 is about here. Let me put on my 39 is about there. And so you have got about a 7% gain, about a 6.4% gain. I would look at, and if it gets all the way back to the top, you're looking at about 11%. I kind of have a rule of thumb, and it reports earnings after market on 6/2, which is, I want to say, is next Thursday. Because this is an earning run, and as you can see down here, let me get to, maybe see down here, the volume has been, it made it up to average yesterday, but it's still been a little bit below average. And so that tells us that while it, there we go. To answer your question on would I keep it and close it out before earnings, I have a rule of thumb. that if I do not have at least 10% profit into the position, I will close it out prior to earnings. Now, if I took off part of the position, in other words, if you've already sold a piece of this, maybe hitting today's high or even, at 5% or so, then that gives you a little bit more leeway on whether or not you want to, hold it through earnings. But it's gotten a really nice positive move up, and you got in at a as it was kind of going back up through the 20-day moving average, and then you get your positive gap up yesterday and a continuation run today. And so that's the way I would be looking at doing it. Everybody's got to kind of make up their own mind. Sometimes I will go back and look at, okay, well, what did it do last time it had earnings? Well, last time it had earnings, it fell hard and then finished up. What about the time before that? Time before that, it had earnings, it was hitting these new lows, gapped up, but then went on to a big move. What about the time before that? Well, it fell out of the sky with earnings. If you look over here, it is just about taking out this swing high on a weekly basis. So that's all very positive. If you take a little bit of profit, like if you take a little bit of profit off the table today, that would be one of the things where you can say, okay, I can on the remaining shares I can ride through earnings. I'm just seeing what's going up and down. Sorry about that. And then 6. Six is actually back down here testing the support at about the 50-day moving average. If you were going to trade off of this support that it's at right now or the 50-day, if it breaks back above it, that would be a potential entry, or you've got another level of support down here at 56.79. Its earnings aren't for a while, and so it's putting in, it's basically testing this. You can see it more on a weekly chart, the 57.14 level. It could pull all the way back here, but now you can lay in that trend line there and see if it pushes back up through it. If we do close, well, I'd want to see a reversal candle on a daily basis before making a decision to move on it. Because right now, this looked really good when it's breaking back up above the 8, but now it's black down below the 8-day moving average, and also maybe close below the 8-week moving average. So it might be into retesting back here at the 55.36 level. But those are the levels where I'd be interested in it. Let's see, 39, TDG. Again, Dorothy, you've had a nice little breakout from an IBD double bottom, which is from here to here to here, and it broke out above that there as an earnings move. At this particular point, you've got really strong support about the 244.71 level, but it is trying to push up. It's a little bit extended, so I would watch the 8 or the 20. Have you already jumped into TDG? No. Okay. Yeah, I mean, for me, I'd be looking for a potential pullback. And wait for that, just like I know you've waited for a lot of other pullbacks that have worked out really well for you. Because as you can see here on a weekly chart, it's well extended away from its moving averages popping up here. You got TSI approaching the 50 level, which tends to be a limiting factor. Okay. I don't know if you guys can hear those alerts or not. It's on Swing Trader. Okay, yeah. That's one thing with Swing Trader, which is a new IBD product. They tend to, still trade breakouts rather than just bounces off of moving averages. So, any other charts today, guys? Oh, okay, Nugget, yeah. Or is that Nugget or Nougat? So here is Tesla. We'll just take a look at that. Tesla is setting up for something. We never know exactly what it is. Goldman Sachs came out the other day and said, or put a target on it up here about 240, and I always kind of find that humorous when, a few weeks ago it hit 270. But on Tesla, you can draw in basically a trend line across here. And as long as that trend line stays in place, you can trade Tesla to the downside. It is bouncing at the moving averages. And so Kieran asked a question about how would I set up my my strategy 3 trades on this. I'm sitting here looking at this, the TSI starting to potentially turn over, hasn't turned over yet, but I've got a little bit more positive action going here on the true strength indicator. So do we favor the long side or do we favor the short side? That is one of the questions I always ask. And what I'll do is I'll pull up and roll over, and I don't think you can see it. No, you can't, because it'll flicker on me. It will flicker on me. Hold on a second. But I'll take a look over here at Tesla, and I'll go to the next week's options. I'll be looking at here, what's the expected move for next week? Somewhere between $8. So a couple of ways you could do it, Kieran, is to look at it and say, okay, if I go 8 down, that would be 214. I could look at the 214 or 215 put. I could sell that for $1.32. I want to basically be prepared, though, in case it does bust higher. If it's hanging here at the 222 level and does that through close to the end of the day, I would look at probably selling about the 225 just so I can take advantage of the theta decay over the weekend. So 225, I'd be looking at somewhere between selling a call at 227 and selling a put at somewhere between 220 and probably 217, and that would give me a total of $4 in premium, and I only need to pack up about $3.70 in premium walking into next week. If I felt that we were going to stay above the 220 level, I could actually jump my put up to the 220. And so that's how I would look at that. And that reminds me, I've got to be able to put that out in about a couple of minutes. Let's see. Nougat. For those who don't know, Nougat is or Nugget is the 3-time leveraged ETF for the gold, for GLD. And as you can see, Tracy, it is looking to turn back over. As you can see, it dropped down here. I mean, it had a huge move when it popped back up, and this is where technical analysis can be used on all of these. It had popped back above all the moving averages and went into this crazy uptrend, pulled back to the moving averages, went on up some more, and so it was up from earlier in February. This run from February to here was about 600%. Now, I know a lot of people who trade Nugget, and some of them trade it well, and others just cuss up and down because it is so whippy. You just have to be very careful with how you're going to do your trades. Like today's trade, it is not showing us that it wants to reverse yet, but that's a $7. You know, it moves 10% plus per day sometimes, and so right now it's just showing it wants to go down with this downtrend here. If it breaks through the 100-day, it's probably going to visit back down into this support level. And as you can see, you know, let's take a real quick look at just GLD. Gold got hammered this week with the strength of the dollar, and as you can see, it is emulating Nugget very closely, very closely. So that's good, Dorothy. I mean, yeah, I mean, you have to have a plan. If you're going to trade something like Nugget, you got to know, one, how much does it move on a daily basis? And it's because if it moves $7, $8, $9 on a daily basis, do you want to get in and get out taking your profits with you? No, you know, simply because on a daily basis, simply knowing that, hey, tomorrow it could, you know, wind up flashing, just like, you know, flashing in the other direction. So let's see. Thanks, VRX. VRX is one I have been watching for a while, Tracy, and also there we go. Of course, it sold off and got whacked really hard. However, it is outside of its, you know, clearly outside of its moving average envelope on both a daily and an intraday chart. This is another one that it is, I think it's a biotech or a drug company. It got hammered earlier in March, and it's been kind of reconstructing, you know, down here. Is this the final low? We don't know, but it is trying to work its way back up, and this is another one of those, because of the volatility, this is one where you want to take, you know, define specific points where you want to take your profit, get out of town as quickly as possible, you know, take your profit and wait for the next setup. But it's got some, you know, it does do some nice, you know, big downtrend, and for right now, the TSI and the momentum are working very well for it. Concern I haven't, I wouldn't make a big bet on this because my momentum is just kind of nothing. My momentum on a weekly chart is still below the 0 line, but it does look like it has really strong support down here at the, you know, 225 level. And so definitely one you could play off of one of the moving averages. And so, hey guys, that's all I've got for today. I want to get out those alerts on spiders and the Tesla trade. So again, have a good weekend. And for those, the error that popped up on the GoToWebinar, apologize for that. I do not know why that sent it out like that. Because I went back and double checked, and I may have made a wrong correction. But thanks for being here. Thanks for seeing past, and I will continue at 11:30 Pacific time, which will actually be, once I get in Hawaii, that will be 8:30. Yeah, 8:30 is when I'll be talking to you guys next time. And so we'll see you in 2 weeks. God bless everybody.